welcome to Property Question Time, the show where you get to ask your property-related questions to our panel of industry experts. My name is Pia Jackson, and with us today we have Tony Gimple, co-founder of Less Tax for Landlords, Nicole Bremner, director of East 8, and Simon Law, chairman of the Society of Licensed Conveyancers. Welcome. Thank you very much for joining us. Now, I hope you've got your thinking caps on because we're going to test your knowledge. And Tony, you are up first. This is a question from one of our viewers, and it is as follows. I have recently returned to the UK to work after 8 years working abroad. We have 3 buy-to-lets with no mortgages with a combined income of circa £1,700 a month across the properties. I will be working and taxed at the higher rate income, whereas my wife will not work for the foreseeable future, approximately the next 3 years. So the questions I have are as follows. Number 1, is it worthwhile transferring the titles all into my wife's name for tax reasons?
You shouldn't do anything just for tax reasons. Don't let the tax tail wag the planning dog. Tax is just another transactional cost, or a vehicle to help you grow your portfolio if done in the correct way. But in simple terms, within the confines of that question, yes, it would. And then complete something called a Form 17. It's available on the HMRC website. Any half-decent accountant should be able to help you with it. And it's simply equalising the income up to the point where the wife, say, gets to the higher rate tax threshold, at which point seek further advice. I
see, okay. Question number 2, is it worth taking out mortgages on the properties to create some debt so as to show expenditure on the houses? I could use the capital to fund our own house purchase.
The short answer is probably no, unless you're going to grow the portfolio. Interest costs are no longer deductible as a business expense. So just raising money on a residential buy-to-let to fund improvements on your own house will just not work out financially. Okay, all right. And final question, would it be worthwhile setting up a company to put these 3 houses in? No. No. Putting residential buy-to-let HMOs into a limited company is the most expensive and tax inefficient thing that you could ever do. Whilst on the one hand, yes, it will fully offset the depredations of Section 24, companies are taxed in 7 different ways. And the simple mathematics will show that it just doesn't make any financial sense whatsoever. Okay. No beating around the bush. Thank you, Tony. Perfect. Right. Nicole, you are up next. This question is, my fiance and I are about to buy our first home, a 1930s bungalow in need of total refurbishment. With the exception of the roof and the walls, it pretty much needs gutting and starting again. My question is, do you know of any useful guides or online resources that would help us through this process?
Congratulations on buying a house. It's a very exciting thing, especially a bungalow, as there are many possibilities. There's lots of ways that you can extend them up and out as your family and your needs grow. As for resources, I think the planning portal is a really good start, because then you will be able to see what is permitted as far as the development of this particular property. It gives you a guide on what you're allowed to do, what sort of planning permission you need. There are also many publications and magazines. If you just go into your local newsagent, you'll see that there are a lot of magazines there that will also provide resources. There are websites where you can check a trade. I think Check a Trade is one of those. There are others, and that will help you get the right people in for the various parts of this development and refurbishment that you're doing. But don't forget to ask friends and ask people who are local in the area who have also undertaken work and who are happy with the architects and other contractors that they've used, because they will be the best people to ask for their resources and input on that.
Absolutely. Thank you, Nicole. Simon. My question is, my parents have a 20% share of a rental property with my uncle and his wife owning 80%. My parents want to be bought out of the property. What are the steps we're supposed to follow, and which professionals are involved at which stage?
So depending on whether or not there's a mortgage will depend on what needs to be done at the time. First of all, of course, there needs to be agreement between all the parties that they're happy to buy the other parties out. And then after that, it really will depend. If there's a mortgage, the mortgage company will need to consent to the people being released from that mortgage first. That may require a certain repaying of part of that mortgage if that happens, which could be done out of the 20% that's being sold. With no mortgage, it's a fairly simple transaction for a lawyer to do. The parties just need to instruct different lawyers to act for them. A transfer deed is drawn up and everybody signs it. The money changes hands and the property is transferred and registered at the land registry.
Super. Lovely. Thank you. Okay, it's time for our golden nugget. Tony, would you like us to give us the golden nugget of today?
About what?
I don't know. Do you have a piece of information, some tips, some guidance for our viewers?
Yes. The Section 24 changes, the removal of mortgage interest costs, are really, really starting to bite. Now is the time to look seriously at whether or not you're running a professional property business and stop being an accidental landlord. If you are running that business, take advice, move forward, structure it as such, and just see Section 24 as it is, a temporary annoyance, and go on and concentrate on making money.
Absolutely. And do you have any advice on where to seek the right guidance and where to seek the right advice?
Really difficult. It's not your average high street accountant or your average high street lawyer or financial advisor. You need to find somebody who specialises in all elements and operates as a multidisciplinary practice, so can bring together all the strings. And remember, the only thing you're buying is that which they know and you don't. So you need to make sure that they are specialists in the field.
And would you say that it's worth going by reputation, finding somebody like that?
Reputation, position in market, recommendation from existing clients, other collateral support by, larger businesses.
Tony, just a question on that. Why is it that you believe that the Section 24 is just a temporary annoyance?
Because in the tax year 2021, it's here, it's over, no point in crying about it. You've got to get on and run your business along different lines in order to do what the government wants you to do, which is run a professional property business.
So just to clarify, it ends in 2021, does it?
No, that's when it comes into full effect. Yeah.
I see. Okay.
Yeah. So you've got all of this fuss about it in the short term. Like Brexit, it'll be over at some point. Life will carry on as normal. You adjust to the new reality.
Yeah. Okay.
There's some hidden dangers though. Section 24 and the changes to capital gains tax were a bit of a bear trap. Politicians may be stupid at times, but not when it comes to money. Everyone's rushing towards incorporation as a way of getting over Section 24. Well, a future Chancellor is very likely to change the rates of corporation tax for property companies.
Sure. Up or down?
Up.
Okay. Always up. Yeah.
Which is another good reason why the limited company route is the least efficient.
Unless you're investing from the beginning and then it's efficient to set up in a corporation.
Only if you don't want to take the money out, only if you don't want to leave it to family without paying inheritance tax. It's a real misnomer that limited companies are tax efficient. They only work if you have no intention of taking money out.
Sure. Okay.
Otherwise, there are a lot better ways of doing it.
Okay. Thank you.
Pleasure.
Thank you very much. Right, well, that's all we've got time for. But please don't go away because we will be back with more of your questions after this commercial break. Welcome back to Property Question Time. My name is Pia Jackson and today's expert panel consists of Tony Gimple, co-founder of Less Tax for Landlords, Nicole Bremner, director of East 8, and Simon Law, chairman of the Society of Licensed Conveyancers. Now, Simon, you are going to start us off with your golden nugget, so take it away.
Okay, so this one is really about putting a purchaser in the best possible position to buy their property. This used to happen quite a lot a few years ago, but it's kind of fallen out of the marketplace. And the best advice I can give you is to go and get an agreement in principle from a lender before you put an offer in on a property. This is because it puts you in the best possible place with the seller to accept that offer, especially in a market where more than one buyer is vying for the property. The seller knows that you're financially ready and you've committed some time already to going into it. All too often at the moment, buyers are not actually sorting out their mortgage until they've found the property. And this can obviously lead to delays. And if you put in that offer and somebody else has already sorted their mortgage out or is a cash buyer, then obviously they're in a better position than you might be, having not had anything at all.
Absolutely. But obviously, if you're a first-time buyer, I think that process is going to be even harder, is it not? Do you have any extra...
As a first-time buyer, you're even in a better position than you could with an agreement in principle, because everybody's nervous about first-time buyers.
Yeah,
and
that's true.
if you haven't really thought about your finances, you may have gone onto an online mortgage calculator and said, yes, I can borrow this amount of money. But of course, with the affordability tests in there, it's not the only indicator. So having gone and sought some independent financial advice, and you don't need to pay for them. There are mortgage brokers out there that will not charge for the advice that they give. Then you can actually be in quite a good position as a first-time buyer, know exactly how much you can borrow, know what the top of your limit is, and then be a financially validated buyer before you put an offer in.
Okay, Tony, we're going to ask you a question. Now, this is from one of our viewers. 4 to 5 months ago, my grand aunt in Australia passed away. She left me a considerable chunk of money, about 72,000 Australian dollars, which equates to about 52,000 euros, a life-changing amount for my wife and I, and as it'll be going towards a deposit at some stage. Since then, the money has been held in currency fair until the exchange rate improves, so I'm not technically in possession of the money yet. The issue is that under Irish law, roughly 12,000 euros is owed to the government as inheritance tax. In fact, this was due last week. Since the money isn't in my possession yet, I haven't paid any tax. Now, here is where it gets complicated. I moved from the UK last year, and there's a chance I'll be moving back again quite soon. Were I UK based, I wouldn't have to pay this tax. I still have my accounts open there. Part of me really wants to transfer the Australian dollars to my UK accounts, but until I know what my next steps are. However, under Irish law, I'm liable for the taxes already. Can you offer any advice on the next steps?
If you're a UK resident, there isn't a huge issue. The Australians or Irish haven't necessarily got a claim. However, you do need to seek Irish tax advice, and that is a speciality in its own right. Yeah. But much is going to depend on where you're resident, where you're domiciled for tax purposes, but it is a highly specialist field. So the Irish advice is what you're going to need.
Right, okay, super, thank you, Tony. Nicole, having sold our house, we're now renting, we are now nicely debt-free and looking to start investing the equity from the sale, about 100,000. A seriously poor credit history may make this difficult. Even opening a decent bank account will be tough, or do you know differently? Does rocking up with a fairly big deposit make a difference?
Yeah, it does complicate things if you do have an issue with your credit rating. However, there are lenders who will consider you, and it does depend on how large that deposit is. So if you've got 100,000 and you're looking to buy a £200,000 property, then you're probably going to be able to get a mortgage. But if you've got 100,000 and you're looking for a £1 million property, then of course you're going to have some serious issues. You're also going to need to pay more. It's not going to be at the same rate as someone with a good credit history. So there are a lot of considerations there. I would recommend going and speaking to a broker rather than doing this yourself and going direct to a bank or a lender. They are going to know exactly who you should speak to and just be able to talk the lender through the reasons why you have that poor credit history, and perhaps it's something that was just an oversight that can be looked at a little more favourably with the help of a broker guiding you through that. But yes, it really depends on how much and what percentage that deposit is.
Okay. And do you have any advice on where to go to find the right mortgage broker, or to find someone who you know is going to offer you the right advice in this situation?
In this situation, I would consider asking around, just asking some people. There are websites where you can find good brokers. If you just look up, Google your situation, you should be able to find someone as well, and then ask for recommendations. A good broker will be able to deal with this and guide you and take you through this process.
Yeah. It's so hard to know what to do. Right. Simon, you are up next. Do I have any legal rights to go after the seller after discovering that the basement of my property leaks due to hydrostatic pressure? Now, I don't even know what hydrostatic pressure is, so maybe you can shed
I had
some
to
light
Google
on
it,
that.
to be fair, to know what it is. But from what I understand, it's a seepage through the walls through high water pressure in the area.
Right.
But we learn something new every day, everybody. So this is going to depend on what information the seller knew and what they passed on in the seller's property information form. So that's the first thing to do, is to have the lawyer who acted at the time to have a look at that, to go through and see what they did or didn't disclose. Now, it's going to be a difficult one to prove that the seller knew about this particular issue, unless the leak is obviously something that kind of completely floods the basement. And most people only use them for storage anyway, so leaks like this may not be something that's in their knowledge. So with the legal principles that are in place of buyer beware, it's actually for the buyer to discover defects that the seller doesn't know about, and the seller only needs to disclose things that they do know about. So the other thing would be to check the survey report if the purchaser got a survey, and all too often buyers don't get an independent survey and therefore are unaware of these things. A survey report would have brought that up. If it didn't, I would be going to the surveyor and asking them why they didn't find that. Potentially there's a claim against the surveyor there if they didn't find it. Otherwise, the purchaser will need to prove that the seller knew about it and didn't disclose it, which can be a very difficult thing to do, and then you're going to sue them under fraudulent or negligent misrepresentation under contract.
Right. Okay. So the moral of this story is have an independent survey done. Yeah.
Out of interest, how easy is it to put a claim against a surveyor? Because the times that I've had surveys done, there are so many disclaimers on that report that it seems that they're saying there could be damp. However, we are not liable if there is not, or if there is or is not. So how easy is it to put a claim in?
Usually their disclaimer would be, we would suggest you get further specialist reports done on that, and that's what they're there to do. So it might be difficult if the surveyor has noted it and nothing's been done, then they're going to say, well, we notified you of the problem. If they didn't put anything in there at all, and they should have, and you would usually they would do damp meter readings and things like that, certainly in a basement, then that would be something that they should be able to fairly easily make a claim on.
Yeah, okay, thank you.
Nicole, it's time for your golden nugget, please.
Sure, I'm going to talk about kitchens and how important it is to make sure that your kitchen is reflective of the price and the style of the property, because it's really important when you are renovating a property that you do put something in that is in keeping with the style of the property, and there's no point putting a budget kitchen into a very high-end, high-spec luxury home, and vice versa. There's no point overspending on a luxury, very expensive designer kitchen if you've got an inexpensive or perhaps a rental property. So I would recommend that you have a good look and look around for a kitchen that does match the property both in style and in price point, so that you're not throwing money away or scrimping and saving unnecessarily on a kitchen. So there are many places that you can go and have a look. There's kitchen places on every high street. So it's just worth spending some time going into all of those, getting some quotes, getting some ideas, and just coming up with the right kitchen for your property. A kitchen really can make or break a sale, so it makes sense to actually spend a lot of time looking at the right kitchen for your property.
Absolutely.
That actually applies really well in the rental market, we found. To have good quality, well-built appliances, it does a whole load of things. One, they don't break as easy.
Yeah.
And strangely enough, tenants are less inclined to try and break them as a result. So it's well worth putting the Bosch as opposed to the Beko, because it will stand the test of time.
Does that make any difference to what you can ask in terms of rental? Having a good selection of appliances and a good kitchen?
Again, we've always found that well-prepared, well-presented, quality renters rent more easily, more consistently, for the same tenants for longer, at the highest the market will bear. So good finish equals good rents equals good tenants, less aggravation.
And longer term tenants as
And
well,
longer term.
because that's the key
Yep,
point, is just
good point.
keeping your tenants as happy as possible for as long as possible. And if they do have a kitchen that's very functional and that they enjoy cooking in, then they're more likely to stay for longer.
Absolutely. Thank you very much indeed. Sadly, that is all we have time for, but please do send in your questions. You can send them in via the website property-tv.co.uk or via email info@property-tv.co.uk. Many thanks to our fantastic panellists. You were superb. Thank you. My name is Pia Jackson. You have been watching Property Question Time. See you soon.